All right, today we're diving into Core Scientific's latest earnings call. And wow, this one was a fascinating story of two completely different realities. You got this huge forward-looking pivot into AI, butting heads with a set of Q4 numbers that, well, didn't look so hot. It's that classic Wall Street tug-of-war, the long-term dream versus the short-term facts.
And the market? It didn't waste any time picking a side. Right after the call, in after-hours trading, the stock took a hit. That knee-jerk reaction was all about those headline numbers.
And that really gets to the heart of it, right? Is the market just caught up in the noise of one single quarter? Or is this negative reaction a legit sign that there are some serious risks ahead for this big AI plan? That's what we need to figure out.
Okay, so here's how we're going to break it all down. First, we'll look at the earnings numbers that really spooked everyone. Then we'll get into management's grand vision for AI. After that, we got to talk about the risks and the reality on the ground. And finally, we'll wrap it all up with our official rating for the next call. All right, let's start with the hard numbers. This is what drove that stock drop, so let's see exactly what Wall Street was looking at.
And yeah, it was a pretty clean miss, both on the top and bottom lines. Revenue came in just under 80 million bucks when the street was looking for over 90, and adjusted earnings per share, also a miss by 2 cents. You know, for the traders out there, this is just, it's clear-cut, it's objective, and it's not good news.
But hold on, this is where it gets really interesting. You have to look at the story inside that revenue number. See that mix? Colocation, that's their new AI business. It shot up to over $31 million. And at the same time, their old-school Bitcoin mining business is shrinking. So this isn't just a miss. It's a picture of a company right in the middle of a massive, intentional pivot.
And that pivot, that transformation, is exactly what management wanted to spend all their time talking about. So let's shift gears and look at their vision for the future, which is all about building these huge AI factories.
I mean, listen to this quote from the CEO, Adam Sullivan. He could not be any clearer. They expect every single megawatt to be for co-location in just 3 years. This is not a side hustle. They are going all in on becoming a pure-play infrastructure provider for the AI industry.
And the scale we're talking about here is just staggering. They're talking about a 1.5 gigawatt pipeline of capacity that customers can lease. To give you some context, that is a colossal amount of power. And it's aimed right at the biggest tech companies in the world who are absolutely desperate for this kind of space. And look, they're not just waving their hands around. They've got a real roadmap. Within the next year, their Pecos site in Texas is going to be converted and ready to go. A few years out, you've got massive projects in Georgia and another huge site in Texas starting to come online. This is the plan they're selling. Okay, so a 1.5 gigawatt vision sounds amazing, but, you know, a vision doesn't mean anything if you can't execute. So now it's time for the reality check. Let's look at the actual progress and the things that could go wrong here. This chart is super important. It shows you the gap between having the power turned on, what they call energized, and actually getting paid for it, what they call billable. Management basically said there's a 90-day lag to get everything up and running for a customer. So even though they've got 350 megawatts energized for a big client, they're only collecting revenue on about 200 of them right now. And that lag? It's a real drag on the current financials. All right, another thing that popped up and definitely created some ugly headlines was a financial restatement. So what is that? It's basically when a company has to go back and fix a math error in its old financial reports. You hear that word and it immediately makes you wonder about their accounting.
So management got right out in front of this one. They explained it was an accounting thing tied to how they wrote off old equipment when they converted these sites for AI. But, and this is the key point they hammered home, it had zero impact on the stuff we really care about: revenue, adjusted EBITDA, or their cash flow. They're saying, look, it's an accounting issue, not a business issue.
So looking forward, what are they focused on? It really boils down to two simple things for 2026. Number one, get more customers. They're way too reliant on one big client right now. And number two, just execute. Hit the deadlines, deliver the power, and do what you said you were going to do.
All right, let's put it all together now. We've seen the ugly quarter. We've seen the beautiful, massive vision. Let's stack up the bull case against the bear case and land on a final rating.
The bull case, the optimistic view, is all about the future. It's that huge 1.5 gigawatt pipeline and the idea that the stock will get a new, higher valuation as it becomes a stable infrastructure company instead of a crazy Bitcoin miner. The bear case, though, is all about today. The earnings misses, the risk that they can't turn that pipeline into actual revenue fast enough, and all the negative headlines.
So, after weighing all of that, our rating for the next call is market perform. Look, the long-term AI opportunity is absolutely massive. It's real.
But the short-term execution risk and these financial misses, they're also very real. We think the stock is probably going to trade in line with the rest of the market until the company proves it can close that gap between energized and billable, and most importantly, bring in some new customers.
Okay, so for neutral, if we're calling it market perform, is there still a way to play this? What's the trade idea we can actually take to the investment committee?
Here's the idea. Let's try to isolate the AI story. The core thesis is that as Core Scientific becomes an AI company, it's going to start treating way better than all its old Bitcoin mining buddies. So the action is a pairs trade. You go long Core Scientific, but at the same time, you short an ETF full of other Bitcoin miners. The goal here isn't to bet on the stock going up or down. You're betting that it will outperform its old peer group as it transforms itself. You're trying to capture that AI story while hedging out all the wild swings from the crypto market.
As always, this is just our analysis for informational purposes. It is not financial advice, and you should always do your own research.